run over, or fundamentals are still strong, or is it a temporary correction? If you look at India figures only, we've seen stronger volumes for gold after the price corrections. Can India and China physical gold demand lead a bounce back?
I think what we have right now is, we had a paper market smash in COMEX and the LMBA in London, huge volume being traded in 2 days on the paper market. And the result has been this massive physical demand, which you've now been describing, comes out of Asia. And why is that happening? We haven't really changed the fundamentals. The world is still printing money. The world is very unstable. The financial market is unstable. So people know that they get devalued on a zero interest rates environment on inflation. So they're using this opportunity to buy cheap physical metal. So Asia is basically cooping up all this physical supply, and that's why you see the refiners in South Africa and Switzerland full flat out producing new supply for these markets.
Where do you see gold settling in the next 3 months and at the end of 2013?
Look, we still have basically rollover periods in COMEX, which are taking place on the future side. They're going to look tight, the leverage is huge, but could we get another correction on the way down due to dislocation of the currency markets? Yeah, that's possible. I think 1250 would be the worst case environment because it's a marginal cost of production for most miners. Otherwise, I think probably April was the bottom, so it's a consolidation phase. We built the bottom, and then we're going to look at basically moving up ahead again in line with the debasement of money globally.
What would you advise investors to do with gold? Add more to their portfolio?
People should buy really a dip and put it away. It's a form of saving, and I don't know what people save. In Asia in general it's somewhere between 10 and 30% of their free cash flow which they save, and I would suggest people are building up their position in a portfolio. If it's 5% or 10% or whatever it's going to be, that should be basically a reasonable call in today's unstable financial markets.
How real are the concerns of Fed exiting QE3? If that were to happen, could that be a dampener for precious metals?
I think if the central banks are rolling back monetization in QE, what would be the consequences be? We would see higher interest rates globally. We would see probably a dollar collapse because it's where the most debt is. And that would mean all financial assets would collapse. So to give you an answer, is there going to be an option for the rest of the world? I don't really think so. If that happens, gold would fall too, but most likely it will fall less because it has no credit issues, it has no counterparty risk. So on a relative basis, still a great place to buy.
Do you agree that the super cycle in commodities is over? Do you still see investors showing interest in commodities?
Look, I think we're always going to need commodities. We're going to eat, so agri is certainly a nice place to be. I think the replacement cycle will continue. If it's cars or if it's electronics, the replacement cycle is somewhere between 3 and 10 years, so we're going to continue to do that. The developing and emerging market world is going to grow. It's going to grow rapidly. Even if you just look at Indonesia, Pakistan, Nigeria, Bangladesh, you have 1 billion people with 7% growth, with a population of roughly 20 to 24 years. So they have all the basic needs like a fridge. Right, and so you're going to need all these base metals, and therefore I'm quite positive that it will continue even if the Western world looks fragile and looks stagflationary despite the money printing.